There, it's J-Rod here for Rich Retirement TV, and today I'm going to reveal my two favorite breakouts in the home building sector, that both of which pay dividends, which is great for us here at Rich Retirement Letter. But before I get into the stocks, I just want to talk really briefly about the housing market. There's been a lot of concern that we're in a housing market bubble, right? That we're going to see a blow up like we did in 2008, where we nearly took down the financial system around the world. I can pretty confidently say I don't believe we're in a housing market bubble. I think we're looking at the convergence of a couple of really important factors. You have tight supply. There are not enough homes to go around for all the people that want them. That's the other correct. There's very strong demand. We have millennials who have been unable to get into homes, in say the post financial crisis, market, but now are really able to get into these homes, and they're the demand meets the supply demand is just kind of forcing prices higher. When you take into account also very low interest rates, and it's you've got a combination here of a couple of things that are just kind of pushing prices higher. But to say it's a bubble would suggest that the demand is artificial, or that there's supply right around the corner that's going to come and bring down prices, and that's just not the case. We can't build homes fast enough for all the folks that want to move into them. So we're probably going to see rising prices here for at least another year or two, depending really on where the markets themselves. But I think we've got a very strong housing market on our hands for at least another few years. And on that note, companies in that space that are building homes that are offering products and services that relate to home building are just on fire. So today we're going to take a look at two breakouts in that space, and take a look at what's going on. Let's dig right in. So here, first, before I go into the stocks, I just want to show you here the strength of this momentum. Right now we're looking at the XHB. That's the Spider S&P Home Builders ETF. And as well, we're looking at ITB. That's the iShares Home Construction ETF, and we're looking at a one-year chart versus the S&P 500. And as you can see, just smoking, to quote the great Boston song. That's what these two ETFs look like versus the S&P. They're up over 120% versus just a mere 45% on the S&P. Not even close. And again, I don't see any, with all the factors we talked about, I don't see that cooling off anytime soon. In fact, my colleague Zach Scheit did a very, very good video earlier this week talking a little bit more about, say, those factors themselves that are pushing the market higher. But on that note, let's take a look at these two breakouts here. The first stock on our list is CARR Global Corporation. That's ticker CARR, and they specialize in HVAC units, heating and air conditioning. And as you can imagine, it's April. It's the middle of April here. We're just getting to the hot part of the year for most people here. CARR has had no shortage of work in the last couple of months here, and as you can see, the stock just kind of we're pushing a beautiful all-time high on the stock, and you see here the breakout point here is at $42 a share. And you see this just kind of traded in this real tight range between 42 and 36. That gives you that's an $8 range there. That points to at the breakout point. You put that throw that $8 range on top of on top of 42. That gives you $50. I believe this is easily a $50 stock, which is roughly 14% higher. Gives you 14% upside from where the stock is trading now. But I think again on the strength of the home building, on the strength of the housing market, this could easily be a $60 or $70 stock. So you're looking at upside anywhere from, say 14-15% all the way up to 30%. As we move forward. So a lot to love here. Stock reports earnings, I believe, next week. And the company's beaten expectations in 3 of the last 4 reporting quarters. And what I really love about this stock for Rich Retirement Letter, we focus a lot on income. CARR pays a 1% dividend, and they are only paying out 12% of their earnings on dividends. The average payout rate for the S&P 500 is much more than that. It's above 50%. So as CARR does well, they'll have more money to shell out on this dividend. I would not be surprised at all to see their dividend increase strongly over the next year or two. So not only are you taking advantage here of CARR's beautiful breakout, but also a good looking dividend here with a lot of room to grow. So take a closer look at that name. Second name on my list is Masco Corporation. These guys focus on, they make water connected products, so sink faucets, tubs. They also have a segment, so they focus a lot on say tubs and spas, and their Delta brand is very well known in the space of sinks and faucets. But they also have a very, very strong segment of paints and other, say, household needs. They own the Behr brand of paint. So and anyone that owns a home like myself, there are basically 2 or 3 big names in paint, and Behr is one of them. So Masco, again, just like CARR, doing very, very well. You see a beautiful breakout here above $60 a share. And the stock's really traded in this at another kind of $8 range here, between 60 and 52. And it's flagging a little bit, meaning kind of pulling back, consolidating after a very strong run for the stock. You take a look at the longer term chart of the stock. This is Masco over 5 years, just explosive growth here off the bottom in 2020. But you see a very strong uptrend here even before the pandemic. So this breakout has a lot of momentum behind it. But so Masco. Chart to catch up here. Yeah. So we got a breakout here above $60. They also report earnings here very, very soon. But the upside here, this is easily a $70, $80 stock, giving you again more double digit upside. But just like CARR, pays a solid dividend, 1.5%, and they also have a very low payout ratio of earnings to dividend. They're paying out nearly 12% of their earnings out on dividends, giving them a lot of room to grow their earning or grow their dividend as profits come in. In fact, for Masco, they're expected to grow earnings 40%, which is some almost 20% higher than the S&P 500 itself. So not only do you have accelerating growth for the stock, you've got a low payout ratio, a lot of room to grow here. You've got, again, just like CARR, a beautiful combination of capital appreciation in the stock, meaning stock gains, as well as a fat dividend to get paid out while you wait for those gains, which should not be very long at all. But these two very good looking stocks in the home building space. The housing market is not in a bubble. It's just very, very strong and has a lot more room to run. Both of the names we looked at today, CARR Global, ticker CARR, and Masco Corporation, ticker MAS, are very good plays to capture the momentum in this moving market. So take a closer look at these two names if you're looking for that upside, along with some income. And for Rich Retirement TV, I'm J-Rod. Thank you so much for watching my video. I'll see you next week.